What's up, guys? My name is Andre Gordon here once again with another video teaching you guys some new things when it comes to trading. And today I want to do something real different, okay? Today I want to put together a mini, I guess you can say, beginner's guide to traders, because I've been trading in this space now for the last almost 3 years, and I find, especially here within Canada where I'm currently residing, there's a lot of different individuals that now see the opportunity with trading, just based off watching my lifestyle, watching the thousands of traders and students we've been able to teach. And I want to give you guys something that you can kind of start from and say, okay, cool. Now I know the basics of trading. I know the basics of this. I can now make a decision or decide if, hey, do I want to proceed with learning the more intermediate or advanced things of trading? And maybe that caused you to reach out to myself or one of my top students. But I want to give you guys a quick guide. So I'm going to share my screen with you guys and go through some different things, okay? I got a little music in the background just so it's not no dead noise or anything like that, but we're going to really zone in on what it really comes down to as a brand new person with trading, okay, guys? So I'm really excited for you guys. Let's jump to the screen and let's put together this for you guys, okay? So the main topics we're going to talk about are going to be what is the foreign exchange market as well as who trades in it, the types of traders, the trading sessions, so ultimately understanding different times of the day to be trading. And then we're going to talk about TradingView, which is the platform that I'm currently on right now. And you may see a ton of different traders around the world using this to mark up their charts or identify which direction the market's going to go, okay? So first, let's talk about what is Forex. Ladies and gentlemen, Forex is the exchange of currency. So many of us are already doing this when it comes down to traveling, okay? I travel a lot between Canada and the United States for a variety of trainings and events and speaking gigs. And every time I do that, I got to exchange my Canadian dollar for the US dollar. Same thing applies if you're currently in the UK and you travel from the UK to, let's say, the US. You got to convert one currency for the other. Right. So right now I'm currently on Euro NZD, okay? Based on where the market is right now, let's draw a line. Boom. It says 1.68606, okay? So what does that mean? For 1 euro, you have to convert 1.68 cents of New Zealand dollars, okay? The extra 606 is something that's called as points, pips. I'll go into that later on in this video. But we're exchanging one currency for the other. So in order to get $1.68 New Zealand, I got to convert $1 euro. Same thing applies when talking about the US to the Canadian, where $1 US equals $1.25 Canadian. Okay? So when we're exchanging one currency for the other, we're participating in these markets. Now, who else participates in these markets other than people like myself, maybe you looking into trading? Well, it comes down to as well as banks, other financial institutions, right? Major corporations. Give an example. If you currently work for Coca-Cola, for Pepsi, they have to pay their Canadian employees at some point. So they got to convert a lot of money from the US to the Canadian to pay their employees, right? Ladies and gentlemen, it's the banks and financial institutions that make up 90% of the market. So a lot of people always ask me, hey, Andre, if everyone starts trading, is the market going to crash? How do we know we're not manipulating the market based off of our dollar power? And I say, hey, guys, JP Morgan, Bank of America, TD Canada Trust, Scotiabank, these major banks are the ones that make up 90% of these markets, right? So it's very important you understand this is a quick synopsis of what trading is, what the foreign exchange market is. Guys, your dollar, your $100, or even your $1 million is nothing compared to what's being moved in these markets, right? So let's talk about different types of traders now, okay? When it comes to different types of traders, guys, this is one of the most important things because I find, especially when it comes to this is where a lot of people get stopped and they may stop of the idea of becoming a full-time trader. They may say to themselves, Andre, but I don't have any time, right? I don't think I can do this. I don't think with school, with work, with the kids, with the spouse, there's not enough time in the day for them to do it. So I'm going to break this down for you guys so you can understand the different types of traders, because when you have this understanding, you can identify what makes the most sense for yourself, okay? So let's first start talking about the scalper, okay? The scalper, ladies and gentlemen, is the individual that is in the market and they're in and out quick. You're in it for maybe a minute. 2 minutes, 5 minutes, 10 minutes, 15 minutes, 30 minutes, right? You're in and out. So you're not the person holding a trade or an opportunity, an investment for hours or days on end. No, you're in and you're out. Okay, you're in, you're out. Same thing applies when it comes to day trade. Okay, the day trader is the person that may not be in the trade for a minute, 2 minutes, 5 minutes, but they're not the person that's holding it for many days and many weeks. They may hold it for a couple of hours, 4 hours, 6 hours, 10 hours, 14 hours, right? The highest they may hold it to is 24 hours, a full day, okay? So this may work better for that person that says, Andre, you know what? I can't be at my charts all day long. I got a lot of things happening for myself, but I do want to check up on my trade throughout the day, maybe 1, 3, 4 times throughout the day, because you don't have the patience yet to be able to hold trades overnight while you go to sleep, right? Now, the swing trader, this is ultimately what I am myself. And I'm gonna break down to you guys as well too why I love swing trading in another video, because swing trading, ladies and gentlemen, gives you total freedom. Okay, before I became a trader, I was that individual running my own car dealership. So I knew nothing about trading. A lot of things happened, a lot of things on my plate. But when I came into trading, I found for myself, I just can't look at the chart all day long. I haven't worked a job in, I don't know, 5, 6, 7 years, right, relative to when you're watching this video. And I don't want this trading, this craft to be another job for myself, right? I look at trading like a craft. I don't want it to be a job. I want to be in a situation where I can enter a trade and go live my life, right? For example, actually, the trade together currency on my screen right now is one that I'm currently in. And we got into this back on July 20th, where today, as I'm recording this video, is July 26th, right? So I've been in it for about 6 days so far. And I'll be honest, I'll probably be in this trade for another couple, 3, 4 days before I hit my end target. So the swing trader is the person that holds their trades for multiple days, maybe a week, maybe 2 weeks, maybe even up to a month. Now, the position trader, these are where more so the banks participate. Okay, banks, hedge funds, major corporations, where you're in a trade and you're in it for months and years at a time, right? The average retail trader like you and I, who trades maybe part-time or full-time, we're not really holding trades for months and years at a time. We may at maximum go swing trading a couple of days, a week or two. But these give you guys an idea of the 4 types of traders. So you can identify for yourself where you see yourself, okay? Maybe today as a brand new person looking into trading, you still have no idea where you sit, no idea where you may be 12 months from now. But being able to look at scalping, day trading, swing trading, position trading, it gives you an opportunity to understand the different types, okay? Now, I guess hear me talking about the term trading, okay? And you hear me talking about the exchange of currencies. Here you guys can see the US dollar to the Canadian, okay? Now, with every currency that we are trading, whether it's the US dollar to the Canadian, the Great British Pound to the Japanese yen, the Euro to the NZD, there is always going to be 2 different currencies involved, okay? Now, let me break them down for you guys in this manner, okay? You're always going to have a primary, okay? And you are always going to have a secondary, right? There's always going to be a primary. There's always going to be a secondary. Now, there's a plethora of other currency pairs. You don't have to memorize them, but let me give you an example of all the major pairs, okay? Major pairs are all the pairs that have the US dollar attached to it. So you're going to have the Euro USD. You're going to have the Great British Pound to the US dollar. You're going to have the Australian dollar to the US dollar. You're going to have the US dollar to Canadian dollar. You're going to have the US dollar to the Swiss franc, okay? These are all of the major pairs, as well as the US dollar to the Japanese yen. And I'm forgetting one here too. 1, 2, 3, 4, 5, 6, 7. The New Zealand. How did I forget about the New Zealand to the US dollar, okay? These are your 7 major currency pairs, okay? Your 7 major currency pairs. Everything else is also known as a minor or an exotic. So for example, your NZD is a minor. The GBP AUD, which is one of my favorite pairs, it's a minor. So those ones move very fast, right? And you have the exotics, right? What are the exotic? Let me give you an example. These are ones that you may not really commonly see, but they are like US dollar to the ZAR, which is the South African, right? You have the US dollar to the MXN, which is the Mexican peso. These are known as exotics, okay? So when you're trading these on MetaTrader 4, it's very rare you may see the average trader on YouTube, your program, whatever it is you're learning from, trade these ones. But heavily, it's the major pairs that are heavily talked about, okay? It's very important you know this. Now, the second last thing I want to talk to you guys about is going to come down to the trading sessions, okay? Because once you identify whether you want to be a scalper, a day trader, a swing trader, a position trader, now what it comes down to is understand the different times of the day to be traded, okay? So myself personally, I'll also go into this in another video. I'll break down to you guys why myself personally, I love trading London session, which also correlates to the trading currency pairs that I use, okay? So it comes to session, ladies and gentlemen, you're going to have London session, right? Make it a little bigger for you guys, actually. You're going to have New York. You're going to have Sydney. And you are going to have the Japanese, which is the Tokyo session, okay? London session for those based off the East Coast of North America. We're gonna stick to the Eastern Standard Time zone just so it's more relative for everybody. For some reason, the Eastern Time zone is like the center of the universe. So I'm gonna stick with that. But ladies and gentlemen, this is 2 a.m. to 11 a.m., okay? And this is all EST, okay? 2 a.m. to 11 a.m. Now, New York session is going to be 8 a.m. relatively to about 5 p.m., okay? Then you're going to have Sydney session, which is going to be 4 p.m. to 1 a.m. EST. And Tokyo has 7 p.m. I believe this is about till 4 a.m. EST, okay? So based off these trading sessions, ladies and gentlemen, what this really means is during London session, all of the currency pairs that deal with the London market, EUR or GBP, they're going to be moving the most, okay? Actually, let's make this a lot easier for you guys. Let me just actually write them out, okay? So let's talk about London session real quick. So London session, during this time frame, if you're trading a currency pair that has EUR, GBP, or CHF involved, it's going to have the most volume, maybe the most volatility taking place during 2 a.m. to 11 a.m. Eastern Standard Time, okay? So that's Euro USD, Euro NZD, that's NZD CHF, GBP AUD, right? If you are trading ones that have ultimately a mixture of both, Euro CHF, Euro GBP, GBP CHF, right? If you're trading any of these combinations where there's two of them, it's going to be moving the most, right? So you're going to see a lot of fluidity taking place behind the session with that. Now let's continue. We're talking about New York session. You probably already guessed it and said, okay, Andre, you're probably talking about the US dollar to the Canadian. Yes. So any pair that has USD or CAD involved, okay? US dollar, Japanese yen, Australian dollar, US dollar, Australian dollar, CAD, NZD CAD, CAD JPY. It's going to be moving more between 8 a.m. to 5 p.m., okay? But if you are trading USD CAD during 8 a.m. to 5 p.m., it's going to be moving the most, okay? Now, Sydney session. This has to do with the Australian and the New Zealand, okay? So anything taking place between the hours of 4 p.m. to 1 a.m. Eastern, you're gonna wanna have AUD or NZD involved, okay? So Australian dollar to the Japanese yen, Australian dollar to the US dollar, the New Zealand dollar to the Canadian dollar, the Great British pound to the New Zealand dollar, right? As long as they're involved between the hours of 4 p.m. and 1 a.m., you are in the money. And last but not least, we are going to have Tokyo session, which is some people's favorites, the Japanese yen, JPY. Ladies and gentlemen, as long as it has JPY involved, like we CAD JPY, NZD JPY, GBP JPY, right, NZD JPY, as long as you're trading between the hours of 7 p.m. and 4 a.m. Eastern Standard Time, it's going to be moving the most, okay? So that's the session. So now you can start to say to yourself, okay, as a brand new person, I can see where I can find free time maybe between 4 p.m. to 1 a.m. This doesn't mean you have to trade all 8 hours. No, ladies and gentlemen, you're not trading all 8, 9 hours. No, you're going to find a time frame within that. In another video, I'll be breaking down so you guys can understand your trading plan. So if you go back to my channel, You look for the one that says, I need a trading plan. I can't master trading in 30 days. In there, I break down for you how to formulate a trading plan for yourself so you can start trading an extra half an hour throughout your day, an hour for your day, 2 hours for the day. Or like myself, I trade maybe about 4 to 6 hours for the week, and then I'm done, right? Some weeks I don't trade at all because I may be holding positions like I'm showing you guys on the left-hand side here. But once you know type of trader you're going to be and you can mix it in with your trading session, it makes things a lot more easier for yourself, okay? Now, for the last 5 minutes of this, guys, maybe even less, I'm going to talk real quickly about TradingView. Now, TradingView, ultimately, ladies and gentlemen, you can create a free account, which I'm currently on right now. I have my real account on my other laptop. But on this example here, guys, you can see a variety of different things. So let me go to a currency pair that I know I do not trade. So it's a free chart, okay? So NZD/JPY. Ladies and gentlemen, right now, once again, every currency pair that you're looking to search, you got to search for 2 currencies. So NZD CAD, right? NZD CHF, NZD JPY, etc. So NZD JPY, let's come here. Okay, let's delete this. I don't need this anymore. Now, there's a few different things you're going to pay attention to when it comes to this. Now, right beside the currency pair, it has time frames. We can view the chart on a 4-hour time frame. We can view it on a daily time frame. We can also go as high as a monthly time frame. We can go as low to a minute if we decide as well, okay? Now, what does this mean when we're looking at the time frame? Well, on front of your screen right now, ladies and gentlemen, these are what's called candlesticks, okay? They're called candlesticks. So if you look at this blue one right here, that's a candlestick. You see these straight line where there's no color? It's called a wick. So you know, like a regular candle, you set it on fire, you light the wick, and then hold the candle, hold it together. Well, ultimately, that's what you're seeing here. So the candle, ladies and gentlemen, can be viewed on a variety of different time frames. So right now I'm on the 1 minute time frame, which means within this 1 minute time frame, this is what has occurred within the market. Okay, so with the daily, every blue means within that 1 day period, the market went upwards. Every yellow means within that 1 day period, the market went downwards. Okay, they make it even more simple for you guys. Let's take a look at this blue one right here. Okay, so from the start of the day, it started right here and it ended all the way up here. Okay, and the next day, look at the bottom of my screen, it says May 27th, 2021. The next day is May 28th, May 27th, May 28th, May 27th, May 28th. During May 28th, the market started here and it dropped down all the way down here, okay? Then a new day started over here. Here you can barely see any candle because the market didn't really move in that day, okay? Once I can view this on the 1 month even if I wanted to. Same thing applies. If I take my arrow, here we have this movement within the 1 month. Here we have this movement within the 1 month. Now you're probably wondering, but Andre, on the 1 month period, why is there the wick so long? Okay. What that ultimately means, ladies and gentlemen, that means within that 1 month period, price worked its way all the way up here, but didn't stay there, and price worked its way all the way down here, but didn't stay here. It stayed relative to right here, which you guys see in yellow. So if I were to circle right here, okay, or a box, I should say, if I box this candle right here, and let's drag it up to that top of the wick, watch just how I drop down from the monthly to the weekly time frame. We're now going to be able to see what occurred within that 1 month period. So I slide over here, boom, look at this, guys. Within that 1 month period, we had this all take place, okay? Let's say, for example, here, we're still seeing a heavy wick presence within this one candle. You guys see this here? This heavy wick presence? That means within that 1 week period, the market relatively stayed right here. So I got to drop my time frame to the daily to see more analysis as to what occurred in the markets. We drop to the day. We know there's 7 days within the week. Let's stay on my page, of course. And we're going to see 7 candles take place within this period. So you're going to see market moved up, market moved down, price started shooting up, doing this thing. Ladies and gentlemen, we still have heavy wick presence within this time frame. You guys can see this here? Wick to the downside, wick to the upside. So that means even on a daily, I got to drop the time frame even lower. Let's say I go down to the 1 hour, right? 24 hours in a day. I should have 24 candles being present within that one box, okay? So watch this as I zoom out. Maybe I'm going the wrong direction. No, I'm not. 1 second, guys. I think I lost it. But you guys get the gist of it, right? I think I just lost it. When it comes down to this, ladies and gentlemen, every different trade, depending on the time frame or depending on the type of trader you are, it's going to decide the time frame that you're trading. You see, someone that's looking to scout the markets, you probably won't be on the monthly time frame. No. It's too much data for what it is that you're looking for. Someone that's looking to scout the markets, you may heavily be on the 1 minute time frame, or you're getting real quick up and down within the 1 minute, right? The person that's intraday trading, maybe you're on the 1 hour time frame, right? Maybe you may even drop down to the 15 minutes looking for the right entry for yourself. Okay, myself as a swing trader, I spend a lot of time on the daily time frame. I'll drop down to the 4 hour. And if I want to get even more precise, which I love to be very precise on my entries, so I'm not in drawdown, I may go down to the 1 hour, even sometimes the 15 or 30 minutes. Okay, that position trader, you're going to be on the monthly, weekly, daily, which once again, banks, hedge funds, and etc. Right? So that being said, guys, on the right-hand side, now the last thing to talk about is pips. That's what you're noticing right here on the right-hand side. So let's go here, okay? Let's take some lines and let's draw this out for you guys, okay? So from right down here, let's make this thing thicker for you guys, to this top point, okay? We can either count pips by looking at the numbers on the right-hand side, or using TradingView, we can use this ruler, start from the bottom, and work our way up here. Okay, if I swipe it over, you can see this was 75 pips the market has moved from down here to up here. What does pips mean? Ladies and gentlemen, we're talking about human beings, and I walk from one side of my loft to the next side of my loft. We count our measure of movement based off steps. 1 step, 2 steps, 3 steps, 4 steps, 5 steps. But when it comes to the market, we gauge it based off pips, right? I like to sometimes call it points because it's a lot simpler for my students, right? But we can count this based off using a ruler or looking on the right-hand side here, okay? Then you may look at the number and say, Andre, 77.303. How is there extra numbers after the cents? The extra numbers, literally, ladies and gentlemen, are considered the pips, the point in percentage, right? Always, I tell them, ladies and gentlemen, make it simple as possible. Just remove the last number, no matter what currency pair you're looking at, and count from there. So here, from 303 to 579, I remove the 3, I remove the 9, and this right here, ladies and gentlemen, will be 75 pips in the market, okay? If I do USD CAD, for example, same thing applies. From the top to the bottom. Let's clone this. Then we can count it either by counting the right-hand side, remove the 5, remove the 2, or use the ruler, which is why I love TradingView. From the top to the bottom or bottom to top, doesn't matter. That is 60 pips the market has moved, okay? So now you know ultimately the type of trader that there are in the markets, the different times of the day to be trading, right? You now understand primary versus secondary, major and minor. We also counted how to select points, what TradingView is all about, looking at different currency pairs, different time frames. Now you learn pips and points, okay? How do we make money based off of the pips and the points? Ladies and gentlemen, there's something called a lot size, okay? Let's write this out, lot size. Lot size can be different ways, 0.01, 0.02, 0.03. First case scenario, I'm gonna keep it just very simple. This is how you can kind of gauge whether you're getting better as a trader or not, okay? Every year when it comes to your trading, your lot size should be increasing. If your lot size is not increasing, then you got to reevaluate what it is that you're doing when it comes to trading. Maybe it's your strategy, maybe it's the pairs. You got to work something out, okay? Now, based off the lot size, we are always going to times it by 10, okay? When you times it by 10, that is going to be the cent or the dollar amount that you're going to times by the lot, by the pip, to know how much money you're going to make or lose, okay? So simple terms, this right here, ladies and gentlemen, will be 10 cents per pip. This here will be $1 per pip. This would be $10 per pip. And this will be $100 per pip. We can go as high as we want, ladies and gentlemen, go 100 standards, etc., and so forth, okay? But here, we go based off this, okay? So to give you an example. Now, let's use the calculator once again. I believe this is 60 pips it was, right? Yes, this move was 60 pips. So you as a brand new person can take the exact same trade right here where I took this exact same trade. Let's say we say, okay, you know what? The market's bouncing off the same black zone. It's just a coincidence, right? It bounced off the same zone a few different times. We see 1 time, 2 times, 3 times, 4 times, and the 5th time we enter the trade, okay? So we take a trade here. We put our stop loss. Let's say you put it right here, 9 pips. So we're risking 9 pips to make ultimately 60 pips, okay? Based off your lot size, ladies and gentlemen, this determines how much money you are going to risk on that trade in order to make how much you're going to win. So when it comes to my advanced style of trading, I teach my students proper risk to reward management, which ultimately means we do not take a trade if we're risking just as much as we're willing to make. So for example, right here, if you guys can see, we're risking 35 to make 35, or 34 to make 34. That makes no sense. We like to stick around 1 to 5, 1 to 7. On the low end, 1 to 3. But that's a whole other conversation here, okay? So here you can see we're risking 9 pips. So that means if you are using a 0.01, okay, that means 10 cents per pip means you're risking 90 cents, right, to make $6. How did I get $6? 60 pips times 10 cents is $6. So you're risking 90 cents to make $6. It makes sense, right? Now, the second one is $1 per pip. You're risking $9 to make $60, okay? The next one is $10 per pip. You're risking $90 to make $600. That's when the numbers are getting bigger here. So now you want, if you're wondering, why is it some traders on social media, you have them making $10,000 in a trade, but the market didn't look like it really moved that much? It's because their lot size is probably bigger than normal, okay? Relative when it comes to trading, ladies and gentlemen, you want to stick to a lot size that's relative to about 1 to 3% of what your account balance is, right? 1 to 3% of what your account balance size is. So based off of knowing what your stop loss is going to be, you're not going to look at what 1 to 3% of your account is, and from there you should know the lot size that you are going to use, whether it's a 0.17, a 0.18, and so on and so forth. Ladies and gentlemen, that comes to a conclusion of our Forex tutorial for beginners. I hope you guys got tremendous value on this video. Please ensure you go through the remainder of videos that I have placed, for example, market structure, knowing about pending orders, how to use MetaTrader 4, right? Because MetaTrader 4 is what you're going to be utilizing to trade with us in the markets. Watch these other videos, get an idea as to what it's like. If you need further information or you're ready to take full advantage of what trading can do for your life with this craft, reach out to myself. I can be found on Instagram at the Andre Gordon. You also can reach out to me on email, network with Andre. Look down below in the description. I have all my full details there, but I hope you guys got tremendous value and continue to tune in because trading is not forever, but it can pay you forever. Okay, guys, take care. Peace.